starting. All attendees are in listen-only mode.
Check, check. How we doing on the mic check there? All right, good. It's so instant compared to Wirecast, both the video and the audio. Nope, shouldn't be a white screen. Yep. All right. All righty. Same audio. So it could just be the bandwidth at a given time coming from GoToWebinar. All right, so we're OCR number 4. Here we are, 14 June. And we're kind of still in the midst of kind of finishing up conversation about 10-minute harmonic wave convergence trades, where the 30-minute is not an influence. All right. So I want to talk a few things here, because for the entry on this, and again, we're talking about get everything going here. So we're talking about the 10-minute wave coming to a convergence point, and the 1-minute wave doing nearly the same. So we got several things to talk about here in regard to this. And so I don't lose track, I want to note some of those over there. So let's talk about things you're seeing on the charts in terms of this. So let's say we have price come down at this entry. A couple of things to remember. Our understanding of why we can have that tight stop loss, and again, from what we suspect is the low, and that should be matching up with the convergence point down here. And as it's leaving that low, we have an entry point. So a couple things to review, because I see people getting this confused. We do want that 2 pips. We're almost always looking for that 2 pips. Now, some of this involves logistics. meaning depending on your trading station, whether you're trading from MT4 or you're trading from TradingView or you're trading from an isolated trading station, you want to be able to execute a trade. You want to be ready to execute the trade at the time this thing's already coming down. You know, you see the 1 minute wave coming down. That's when you need to be ready to execute in your trading station. So for me, it's easy because I have a Rex trading station that allows me to float my buys and my sells. And so I'll just float that panel right on top of my chart until I'm pretty much ready. When I see the convergence, I can click the buy and get my market open unless I have, you know, single click entries. I'm ready to go. So when this converges and it starts bouncing up and I see we're actually bouncing, you know, I'm doing that click. I don't have to look over to my trading station. I don't have to look over to my trading station. I don't have to open up other stuff. You know, I'm ready to go. So what do I see on each side of this as incorrect? I see some traders who maybe have a support and resistance line here of some sort, and as soon as this price tags it, they're entering the trade. We haven't even gotten a blue candle yet. We haven't even gotten a pullback leaving a wick on a red candle. All they care is that it tagged this line and they're entering the trade. You're going to get smoked. Because sometimes this thing's just going to continue right through that support and resistance line, even though it looks like we have our convergence. So you have to have the 2 pips of pullback. Now, granted, if it's very impulsive out of that convergence, it might go faster than what you're prepared to deal with, which is why you need to be ready as price is already coming down before it even gets to the convergence point. So early entry is one problem. Now that's trader controlled. The second thing that is going to happen that I see many times is, here's my entry. And that introduces all sorts of problems. Because your RAS is essentially focused on getting in the trade. So let's have a little pop quiz. When is this okay? And when is this not okay? Not rhetorical. I'm looking for answers. I've just showed it way beyond 2 pips. So I'd say about 50% get it. It's about risk reward. It's about risk reward. You don't want to be foolish. See, first of all, you should be trading in a KSP environment to where, you know, with what we're doing, you know, 80% of the time you should be having positive pips. after your exit. So I surely don't want to be getting into a trade, 6 pips into the move when I'm in a 10-minute pitchfork and the entire half channel from bottom parallel to median, is 12 pips. That's just, don't play the game here at the small level of magnitude because it's not applicable. In other words, well, that's almost 1-to-1. Well, you got 7 because you're down here at least at -1. You can't enter here at 6 and put your stop loss here. I've seen people try and do that. If you enter here at 6, your stop loss is still down here. This is an Elliott wave rationale for why our stop loss is -1. So you can't have some small channel where, I'm 7 before spread and I'm hoping to make it to the median. I'm hoping it doesn't just, peter out as it gets to the median and come back down. Now, on the other hand, if I'm on a 15 or 30-minute pitchfork that's 160 pips wide, which means my half channel from lower parallel to median is 80, expanding my stop loss by 4 is okay. Because if it's 80 and I would normally make 77, to make 73 is just fine. But there's other thinking and other actions that has to go into this. It's not just one condition that you have to worry about. This is where RIS comes in. Remember, all of the 40% measures are from harmonic wave convergence, not your point of entry. The 40% stop loss is from harmonic wave convergence, not your point of entry. So the later you enter the trade on a convergence, the higher risk you have of being stopped out because your 40% is too far. In other words, if that's my convergence point and I measure my 40%, as price is moving up and I measure my 40% from there, when price, pen just floated off. When price is up there, there's my 40%. So what are you going to do if you entered the trade here and price starts going back on you? And remember what's happening here. What's happening at this convergence point? What are we looking at here from a waveology standpoint? We got a wave 1. And so if your 2 pip entry is there and you're entering the trade up here, you're essentially saying, you're essentially dealing with a ticking time bomb. Because the higher this move goes, the greater the chance is it's going to end and turn around. I'll say that again. The higher this goes, the later your entry, the higher percentage right after your entry is going to turn around. This makes you a betting man or a betting lady. So the difference being if I've got an 80 pip wide channel or an 80 pip possibility, if I'm going from lower parallel to upper parallel on a 160 pip wide fork, you're going to have a big move. Where's the big move most likely going to come from? If I've got a pitchfork and I want to go from the lower parallel to the median, more often than not, what's that big move going to be? Yeah, a wave 3. Wave 3. Depends on the width, depends on that first, how far it goes before it cuts back. But the bottom line is, if it really is going to traverse from the lower parallel to the median, maybe it does fit in a wave 5, but I at least have to have a 3. And what do I have to have in order to get a 3? A 2. Yeah. And what do we know about the 2 wave? It can't go below the start of the 1 wave. So if there's going to be a big move in price, to go from here to here, in terms of what's going to happen, there has to be a wave 2. And the whole purpose of having the waves as we have them is to protect against erosion and to protect against reversals. That's why POT trading came about. Oh, I like POT. I want to go harmonic wave convergence to harmonic wave convergence. Okay. Well, if that's the case and you're entering up here late, you're going to have erosion in order to get to the 2 wave. And you're going to go negative because you didn't get in low enough. And at that point, you're hoping it doesn't just do that and go below the X of the 1. So late entries and staying in without POT trading is taboo. My perspective is 2 to 4 pips on a normal size channel. And if you don't get the trend bars, if you don't get a candle to close and the trend bars turn red, I look for something else at that stage of my growth. Well, Steve, you've said you can take live candle trades. So how do you arbitrate that? Why wouldn't right now you be doing live trades? Why wouldn't you be doing, it's 3 pips, I'm going to get in even though the candle hasn't closed in the maybe the bars have turned red, but I'm going to get in before the candle closes. Yeah, when you're so Mark gets the brownie point. It's going to mess up your KSP. Remember how KSP gets built. Focus on something. Focus on one thing. Do a volume of trades on that. Harden the programming in your subconscious so your RAS gets it. Learn to practically be trading, if not trading, subconsciously, where everything's automatic and you see it. and you're not mechanically going through a checklist or having to see what's going on. Develop the KSP for it. And now you're working through neuroplasticity to program your subconscious mind so your RIS knows what to filter in and filter out. The RIS is a little bit stubborn. The RIS responds to two things in terms of reprogramming. One is volume, repetition. The second thing it responds to is extreme shock. So significant that it'll overwrite any other opinion about whatever it is you're thinking about, because it was just that alarming. So it's going to take volume in our case. Lower level leading upper level. It's when a lower level wave gets to the extreme of a convergence before the upper level wave does. Very prominent in multi-wave. So we want to work on this is why I said let's go back. Let's just do 10-minute harmonic wave convergence where the 30-minute wave isn't an influence, and trade that and trade that and trade that and trade that. Some of you are trying that. Some of you are still skipping all around. Well, you know, the trade was there. Should I just not take it because we're supposed to be focusing on? Well, I'll let you figure that out at this point. If RIS takes a volume of stuff and you interrupt that volume and that repetition by doing something different and trying to create a different RIS set to handle a different situation, and then the next trade is different yet, and the next trade is different yet, you figure out how long it's going to take you to program your RIS, if ever. We're talking about how to learn. That's how you learn to trade, is by understanding how to learn. And then even the singular focus has its own compartmentalization, doesn't it? Because we can get in here and talk about this now. Still on fill. So in a generalized way, in moving from multi-wave to TAB29, I say lower level leading upper level isn't a major consideration in TAB29. Now, this is where we're going to separate the men from the boys and the women from the girls. You have to be able to connect dots. If you can't connect dots, you're never going to be a trader. Just hate to break it to you. I'm not sure what else you'll be able to do, but you're not going to become a trader. Because there's too many things that are applicable to your trading that just can't be taught. It's that 50,000 page PDF. The cool thing is you are already empowered to figure all this out, because you have charts and you have TAB29 and you have pen and paper or electronic sources, be it Facebook or spreadsheets or specific products. So when I say TAB29, lower level leading upper level is not a major issue, 90% of you are going to the charts with that in your head, because that's what Steve said, and you're looking at just the lower level leading upper level situations that appear technically on the chart. That's an RAS limitation. What you really need to see is step back and really, what is the big view of TAB 29? What is the comprehensive view of how to be a TAB 29 trader? The TAB 29 trader is given a lot of tools and a lot of resources, and obviously we have a lot of training on it. So we want to see the entirety of what TAB 29 is. In other words, what I'm saying is there's this big universe of what TAB 29 is, and lower level leading upper level is just one piece of this. So when I say lower level leading upper level is not really an issue in TAB 29, what I'm really saying is multi-wave has one formula per plot, for one plot. If you move to TAB 29 and you look at the 1 minute wave, it has 4 formulas for one plot, 4 separate indicators. And some of those smooth and some of those lag and some of those stretch by design. And therefore the look that we get, the frequency that we get, lower level leading upper level, as an impact in TAB 29 is less frequent and of a different significance than multi-wave. Not just because of the basis of how it's built and how it plots. What about that 10-minute wave? What is the 10-minute wave on a 1 minute chart? What is the 10-minute wave on the 10-minute chart? Give me its name. Yes, power 10. See, if it was just peak 10, when I say just, it still has 4 indicators for one plot. Power 10 is evaluating 3 different time frames with the peak 10, and so there's 12 per plot. So when we have that 1 minute into 10-minute, we're already dealing with 16, and then we've got 9 in the 6 trend bars. So we got 25 indicators at work. That's a whole hell of a lot different than 2 in multi-wave, the 1 minute and the 10-minute. So its performance by design is different in a lot of other areas. And depending on time period, sometimes these are just not as crisp as you'll see in multi-wave in terms of the plot. But it's at an extreme. The waves are at their extreme. So in the end, we can't even say lower level leading upper level in TAB 29. Because aren't there levels of lower level leading upper levelness? From a technical perspective, that's lower level leading upper level. That's lower level leading upper level. That's lower level leading upper level. And yet these are 3 different things, really. The degree of lower level leading upper levelness goes up as the degree of the lead enlarges, gets bigger. We don't measure on the 1 minute chart, we don't measure peak 10. We only measure peak 10 on the 10-minute chart. And we're not really, we can't. The TAB29, no, TradingView has to be a little different than what, we grew up with on pro charts, because we can't bring, at least right now, we can't bring lower level waves to an upper level. So you really, depending on scale, the general teaching is take your trades down the 1 minute level. I will talk about taking 10-minute, 15-minute, 30-minute trades from a 10-minute, 15-minute, 30-minute chart. But I'm using other stuff when I'm talking about it, like pitchforks, like energy points, etc. Not just raw TAB29. So because we can't bring lower level waves to upper level charts, we don't know the moment of convergence on a 10-minute chart. There's too much slush in it, even at the 10-minute level. So that's why we drop down to the 1 minute charts. At some point, when TradingView changes some of their code restrictions, and we can bring lower level data up to upper level charts, then you'll see the 1 minute, 5 minute, 3 minute, whatever waves on a 10-minute chart. But right now we can't do that. It's a technical limitation of TradingView. It was not a technical limitation of pro charts. So because of that, you can't, any chart you look at, the lowest level wave you can see is the time period of the chart. Maybe you've observed that. So let's get back to this concept up here where we're talking about the universe of TAB29 and why you can't allow your RAS to think just about lower level leading upper level and isolate it. You have to think about the entire world of TAB29. And what that also means is understanding that at certain times you have money management options, and if you like to take a trade, there are other times where you don't have volumes of options for money management. Right here, trade A, in very simplistic forms, I can say, well, one of my money management is going to be harmonic wave convergence to harmonic wave convergence. That's what I choose. I don't want to mess with POT. I'll run the risks of erosion. I'll run the risk of a reversal after I'm pit positive, but I'm just going to let this thing go 10-minute to 10-minute. That's viable, trader's choice. There's nothing wrong with that. Second money management we have for that is to POT it. Oh, that eraser's fat. Trade B, lower level leading upper level. Yeah, I know, Tim. They had their, trust me, I love them too, because I used to be able to code them and test stuff, and now I kind of gotta wiggle and dance and pay. And I'm not going to spend the time to become a PineScript editor. So what about trade B? Why would I bother taking something that may have and again, it's lower than it was in multi-wave, why would I bother taking a trade that has a propensity to reverse and at the 10-minute level that may retrace, and at the 10-minute level that that retracement doesn't have to be very big before it decides to slide on down to a lower low? Why would I take that trade? Let me ask this. Why would I take that trade? Or should I just avoid it? Sort it out? See, it's so easy. It's so easy. And you need to witness this as you are in this session as an attendee. And I ask questions. What happens when I ask a question? What happens to you when I ask a question? You have the human nature, the eagerness to respond. But you're so focused on the question. What do you think your RAS is doing? Unless you're a mature trader and you've been around for a long time, you don't have the filtering mechanisms yet. You're listening to my question and you're keying in on just the words I asked and the conditions there. You're not allowing your mind to think about other stuff. We've already answered the question on why I would take this trade. Mark already told you. You would take this trade because you've already taken it lots of times in your demo trading while you're exploring. And you've noticed something. There are times this thing goes for 20 pips. And there are times it goes up 3 or 4, turns around and comes down and goes to that lower low. And from your point of entry and blah, 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 you're always negative when it decides to reverse. Small retrace and go to that lower low. But if you minimize your money management here, see, knowing what it does says, okay, I can look at the attributes of what it does and adjust my money management to deal with the realities at hand. And what that means is, if you say, oh, I went and took this trade 20 times and 7 of the times it went for 15 to 20 pips, and 13 or 14 times it went 3, 4, 5, 6 pips and turned around and came down. And at that point, I was waiting for wave 2, and then it reversed. I got stopped out. that condition just says, I can't do that. There, I'm just betting the 7 times it's going to win and negating the 13 times it's going to lose. To the rescue, POT trading. If I say I am actually going to sort in and allow a lower level leading upper level, and notice how close I made it here. I'm going to sort in and allow a lower level leading upper level. I must POT trade it. So when it hooks back, I automatically get out of that trade. Whether I'm 3 pips up or 8 pips up, I'm not going to allow it to road off waiting for a 2 while I'm trying to get to the other side for harmonic wave convergence. I'll POT trade it. Well, Steve, if it's only 5 or 6 pips and it starts to come back, and I want to see if that wave 2 is really going to go, maybe this is the time it goes 20 pips. What have we already said? If price is going to go from level 1 to level 2, and that's a decent distance, the only way it's going to cover the decent distance is with at least a 3 wave. It might be a 5 wave if the distance is far enough, which means I can exit here, and if it is going to go up, I will just re-enter the trade. Because the only way it's going to go that distance is if there's a 1, 2, 3. What you do by exiting here is you prevent the erosion and you prevent the -3. If it is going to be the big move and it is going to be the one that goes 15 or 20 pips, you can re-enter this trade. And by doing so, almost always totally eliminate -3s from that possibility. So focus on your POT, get sharp with it, and at this point in time, you should be there on how to exit, because that's what we're working on now for the 3rd week. 10-minute harmonic wave convergence without the influence of 30-minute wave. Exit on the POT. Exit on the peak 1 flipping back trend bars or 40%, whichever comes first. But if you're entering lower level leading upper level, you just automatically say, I'm going to POT this. I don't. Now, again, this is you having choices. But don't be so short in your vision and say, oh, I just won't take it. Because Steve said lower level and upper level in multi-wave is not that big of a deal, because in that circle of the big picture of TAB29, we know there's this thing called POT. So it's okay to take lower level leading upper level, because as a mature TAB29 trader, you know you can POT a trade when there might be possibilities, but they're not as finite and defined as you might normally like. There's still chances of it going sour on you, but the risk reward, if it goes, is going to be good. So I'm not just doing the harmonic wave convergence where I win and get positive pips, or I lose and get a -3. Here I may exit at +2. Here I may exit at +1. Here I may exit at -1. Whereas your real danger in lower leveling upper level is when you enter late. Because now you don't have pips accumulated to not erode. So let's talk about this. Because traders, this is the one place I think traders struggle a lot still. From a 10-minute harmonic wave convergence, right now with what we're doing, where our exits are peak 1, trend bar flip, closed candle, or 40% erosion, and again, from low or high, not your entry. And I usually say whichever comes first. So this should help you understand why you know, in 10-minute trades, where the pip gain, so I'll review TAB29. 10-minute trades. What's the average pip gain in 10-minute trades? Somebody give them to me. So what I said, Clay, from the low or the high. All right, brownie points to Tim Munsinger. We have small 10-minute trades. They're typically in that 5 to 8 pip range. We have medium 10-minute trades, which are typically in that kind of like 9 to 11 range. And then we have large 10-minute trades, which are 12 to 15. And yes, we can have smaller, and yes, we can have larger, but statistically, if we're going to divide it into thirds, you know, we'll have a little fringe on each side of that. So there's no way in advance of knowing which is going to be. Which means a 10-minute trade, if I'm looking at it on a, ow, my knee. If I'm looking at it on a 1-minute chart, that whole stretch of the 10-minute wave is typically going to be a 3 or a 5. So if I'm at the smaller scale of this, 5 to 8, if it statistically lands in the smaller trade measurement range, and I've got to complete a whole Elliott wave 1, 2, 3, or 1, 2, 3, 4, 5 in 5 pips or 8 pips, how big is that wave 1? %40 is 40%. It doesn't matter what you're measuring, whether it's harmonic wave convergence or POT. 40% is the same. It's for the bulk of what you would see as a 10-minute move. 10-minute move has its majority in 2 to 3. Whole bunch of short 5s, whole bunch of failed 5s, whole bunch of double tops. Yeah, a couple pips, right? Whether it's 1 to 2 or 1 to 3. It's not going to be 3 to 5 pips on a 5-pip move. If I got a 5-pip move and I'm measuring the length of the one wave, you know, it's probably 1 to 1.5 pips. On an 8-pip move, yeah, it might be 1 to 2. Start moving that middle category. Okay, maybe that one wave is, 3 or 4. Which is why you need to sort out your entry. Why you can't enter 5 and 6 pips late on a trade you're going to POT. And if you're taking a lower level leading upper level, you already know now that you really should only POT that trade. So what happens to your entry when you get closed candles and you're 4 pips into the trade? You're already, for the most part, you're already negative. You're still negative is what I should say. By the time you got in 2 to 3 pips, pay the spread, price is turning around on you, you never got positive. What do? There's no trend bars that you work with. You're not going to wait anymore. KSP. Well, what if it, see, notice the what if, not I've experienced this, Steve, but the hypothetical. What if it goes 2 pips below the low and converges again? KSP will tell you, once you get your KSP, that when it breaks that -1 below the low, normally it goes lower. And when it does, I can re-enter the trade. There's no need to be sitting there waiting for a wave 2 when you've already entered past a point where you're negative before you start having any erosion. Sorry about that. There's no need. What I'm saying is this. Your entry doesn't matter whether we draw that line at 2, 3, whatever. And as soon as you enter, there you are. When I see this, it drives me nuts. Do you remember the difference when we looked at the side-by-side income calculator, the difference between 5 pips a day and 6 pips a day? I mean, I'm not asking specific numbers. I'm just talking about by magnitude, right? This isn't a place that you want to wait it out and see if it's going to go. First of all, you're talking about some sort of lower level leading upper level kind of condition. You got your 2 pips, 2.5 pips, 3 pips, bars flipped, closed, you enter. As soon as you enter, it's dropping behind you. See, exiting here versus here will almost always be more than 1 pip in your bank. So every time you enter a trade and it's going against you, that you enter a trade and it's going against you that soon, you need to remember that side-by-side income calculator. And what saving 1 or 2 pips on a stop out can do to your account over a compounded time. Well, I've exited there sometimes, Steve, only to watch it turn around, just 1 pip lower and go 8 pips. See, the interesting thing about the way your trading account works is it doesn't look at what might have been. It just looks at what is. So you need to stop playing the what if game. You need to make the best mental decision based on KSP and your knowledge and your KSP, not just on the chart technically, your KSP of the math, do the math, and what 1 pip saved really means. Who cares that in 1 case here, in 1 case there, it went 5, 7, 8 pips? Oh, if I only stayed in, I could have had that. Now, what I've done here is compressed your volume of trades to give you that advice. You should witness that. The reason most people stay in there is hoping and wishing. Their ego says, "Oh, you made the decision to enter. You better let it. You better let it pan out." Well, here's the point. Why would you exit here? Because you have a set of rules. This is what kills me about staying in this trade till you get stopped out. What are the rules for exiting a harmonic wave convergence or POT? P1 hooks back, trend bars flip, closed candle, or 40% erosion as measured from the low. Almost always, this reversal is already below 40%. So why do you want to stay in down here and defy the only 2 rules we have? Show me where I put an asterisk up here. Show me where I said there's actually a rule 3 for exiting. Well, it's microness. I wouldn't get lost in the mechanics of drawing a line here to see where the 40% is when we're talking about 3 pips. Where's that 60% line or 40% line, depending on how you want to measure or think of it? Where's that line? What's 40% of 3 pips? 1.2. Yeah, are you really looking for it to go 1.23? Come on. This is a visual thing you need to just pick up on. And essentially, what it means is, if you're already negative, there is no 40% line to worry about. The whole thing in waiting for the trend bars to flip is what? It's minimizing the erosion from the profit you have. It's minimizing the gain you already have. My move goes up. It starts coming back. Oh, the trend bars have flipped. And what that means is, I'm getting out here versus letting this whole thing bleed off. Well, what if it keeps going and the trend bars haven't flipped, but I get to my 40% line? Well, you still want to prevent any more bleed off. So it's the trend bars flipping or the 40%, whichever comes first. And this is you in profit. That is you pip positive. And you're measuring the bleed from your pip, trying to minimize the erosion. When you're zero here and price is coming back on you, there's no trend bars to wait for. There's no 40% line. You have to understand that math. We have two rules. There's no big asterisk up here and down here and tiny 8-point scribble. I give you some 37 exceptions. So why are you making the exceptions? Yeah, exactly, Mr. Packus. Pay the dealer, move to the next trade. And it still may be that trade. If this thing just slides down more. But again, work the best you can with energy points and you're going to minimize some of this stuff. See, when I talk about statistics and, oh, look at this, 15 to 20 pips, maybe 7 out of 13, 7 out of 20, the other 13, end up being the +2, +1, -1. So because these numbers are, so get rid of the negative from your head. You're going to have more lower level leading positive, lower level leading upper level that are positive here. And on a one-to-one, trade win to trade loss basis, you have good risk reward. Get the negative is bad out of your head. But what changes these percentages, if that's just raw, is when you click on your understanding of Fibbo, you click on your understanding of INS and or other support and resistance, you click on your understanding of pitchforks, of trend lines, i.e., you're trading energy points. These numbers now go in your favor because some of these that are going to be losers, they're just not there to take to begin with. There's a reason it was lower level leading upper level. There's a reason there's going to be a retrace because it's going down to another support and resistance line that should be an energy point. Shouldn't be taking if it's not an energy point. So you're going to eliminate a lot of the lower level leading upper level by focusing on energy points. Yeah, it's the same for the Power 15. Moves are just going to be slightly bigger. Yeah, if you got a really good setup, and you've got a fork and you got the 618 going right through it, and the candle comes down and smacks right on that line and starts retreating. But oh my gosh, I have lower level eating upper level. Don't worry about it. That's probably just that nuance, because there's 25 indicators working for you instead of 2, and a lot of what they're made to do is to give you more trades and to give you better exits than what you had in multi-wave. All I care about when it's tagging that pitchfork is that these are at an extreme, and they're tagging the pitchfork at only one point in time that they can, where that candle is hitting both the pitchfork and the 61.8 or the 38.2 or the harmonic target 55. This is not so much an issue. So we focused on harmonic wave convergence. We're going to POT the first exit. You have 2 exits. Peak 1 hooks back, trend bars flip, and or peak 1 flips back, trend bars don't turn fast enough, and we get to 40% erosion from the point of harmonic wave convergence, not your entry. Those are your exits. Find your KSP. Let your RIS have repetition to make it sink in. And with that volume of trades doing just that, you're going to teach your RIS what to look for and not look for based on what you get. But if you mix it up with buys into the sells, and the 240 was doing this, and I took this because, and once before I saw this, you're not going to grow your RIS. It just doesn't work that way. So we've been 2.5, 3 weeks now, harmonic wave convergence, 10-minute wave, 30-minute wave, not an influence. So the next week to 2, I'd really like to see some POT trades, either because you saw, whether we want to call it a wave 2, it doesn't matter, because you saw a convergence and a pullback, and there was an opportunity based on risk reward to get into the trade. Now remember, the pullback has a couple rules. Excuse me. We have 2 possibilities down here. First one is the higher low. Matching price. And remember, this 2 wave can be deeper. We still should have a higher low. We're not basing it so much off the 10-minute wave on the 1-minute chart. We are basing it off the 1-minute wave. So that would require your typical TAB29 reversal, your peak 1 reversing and getting green bars. The second one, if I wish I could just screen shoot or, copy and paste, the program doesn't allow it. The second one is I don't have the higher low, but what allows me to take that trade is the divergence. It's actually a lower low. But the lower low is in contrast to price having the higher low. So that's your POT entrance or the termination of that. We're not yet into the third pullback, but that could be taken if there was a third pullback that we're trading now. We're not, so I don't really expect to see it in the group posts. But if we have a third pullback in price or in the scenario where I have the higher low on the first pullback, we now have a trend line. And that trend line bounce only requires, over here, that trend line bounce only requires the peak 1 hitting it and bouncing. It does not require all the trend bars to turn green. So if there were some trend bars that turn red on its way down, we don't have to worry for those to convert back to green as long as I have a trend line either in my indicator or in my price. But we don't expect to see those because trading the first pullback, trading what typically is the wave 2 pullback, the first pullback, is where we are right now and where we're gaining proficiency in programming our RAS. So now through next week or the following week, that's what we really want to focus on in the group is POT. Now you don't need any other touches here. If you have it, it's great, but you don't need it because you're relying on the peak 1 flip. Again, understand the attributes of TAB29 and what it takes to create a flip. And then you have the TAB29 trend bars, which give you, it's a second indicator, but gives you confirmation on what's happened. Guys need to understand what constitutes TAB29 when we talk about 1 versus 4, or in this case, 4 versus 12, 1 versus 1, 1 versus 4, and 1 versus 12. The degree of unanimity that has to agree between 4 different indicators here and 9 different indicators here to say this thing is flipped back up. In multi-wave, we got faked out a lot. We had a lot of, sawtooth because it only took one indicator measure to say, oh, I think this thing is reversed. Here, we have to have a unanimous decision. Here, notice it's not, 4 out of 6 green bars, or, it's 6 out of 6. And realize that last one that turns is 4 separate indicators that all have to agree. So we really have 9 out of 9 indicators here saying this thing has reversed. Short-term level, 1 minute wave. But 9 out of 9 up here, and down here, 4 out of 4. If we're just looking at the 1 minute wave. It's not the same as multi-wave where there's just one. Yes, I said it's exactly the same as a harmonic wave convergence, which means candles close. Now again, depending on scale, gives you your tolerance of whether you have to shut that off at 2 and 3 and walk, or whether you can let it go to 4 or 5, because as I've looked at it, the 2 to 3 move is going to be 25 pips. The trend bars flipping and candles closing on that might take me up to 3, might take me up to 4. Not going to do it on a 10 pip move. It has a chance to be a big move if I've got my waves. How would I really look at that? Well, this looks like where a wave 1 should be. And oh, look, this is, I didn't draw it this way, but oh, look, it's 50 to 61.8, where it's going to reverse 73% of the time if it's a wave 2. And I got my, it's coming down there, and that's where price is reversing at the time I'm getting my hook back in wave 1. So there's a high probability this is a 1-2 move. And I'm in that zone where it should be. So if this has to slide a little because there's big potential, that's okay. But you always have to pay attention to channel size. How many times, in other groups and elsewhere, and even in here, sometimes you'll hear traders say, hey, watch your channel size. Open your RAS to look at channel size. Should be the first thing you look at, not the last thing. TAB29 is designed to save a lot on head game. Just execute, just execute, just execute, and you'll be fine. Play the numbers. See, what causes the hesitation? We're going to end here. What causes trader hesitation? Yeah, now we're getting there. Lack of KSP, lack of KSP, lack of KSP, lack of KSP. Confusion comes from lack of KSP. Now again, got to watch where you are in your trading progression, because I don't want to sound conflicted or sound hypocritical when I talk about, hey, your trading accounts, your demo accounts to learn and etc. Don't measure yourself. But you transition at a point where, okay, if I was live money, what would I be doing? And if you're still hoping and guessing, then you need to back up and go back to demo to learn what not to do. Shouldn't be at a point of confusion as a trader. Shouldn't be in a moment of panic or, gee, what do I do now? That's experimental stages. That's learning what not to do in your account. That's your laboratory. Your laboratory hones what you do, and your RAS builds as time goes on, what tolerance, what isn't tolerant, and now you've got the parameters down, and now you just trade the hell out of that and watch the results. KSP. And you'll know in your head, with just looking at the chart, how far this move is, because you're always aware of this scale, and you're always trying to keep it to 5 to minimize your distraction, at the lower level charts of trying to guess how big a candle is. You already know how big it is because you know what those grid lines mean. Boom, that's a 2 pip candle. I know it. That's a 2.5, 3 pip candle. Boom, that's a 4 pip candle. I know it. I have to look over here to look at price. So when you find yourself confused, when you find yourself panicking, when you find yourself in that, oh crap, I hope this works mode, you need to back up. Just you're getting the feedback you need, which is really cool about the human brain. You're getting the feedback you need. Because that's not how you're going to be a successful trader. You don't just keep doing that and say, okay, it's time to go live. To where you're still confused, you're still making panic moves, you're still hoping and wishing after you make the trade. Now it turns into panic because a lot of times when traders go live like that, they forget 1%, 2%. They're in there at 5%. All right. So the bottom line today, there's two kinds of exits. If you're forced into a POT or you elect a POT, you know what to do with those two exits. If you enter the trade late, you're asking for trouble. Unless you have decent scale working for you. If you enter the trade late and you have decent scale working for you, I would still POT that trade. You just got in at the top of the one instead of the bottom of the one. So hook back, blah, blah, blah. Maybe you go -2. Maybe you even go -3. Hey, your fault. You got in late. But at least you'll have a chance to make it up, because if it is going to be a wave 2 to 3 move, you're going to re-earn that money. Have a move. We go up here. I enter here. Boom. I'm out of the trade. Negative. My account reads, -3. Price comes down. Oh, here's my wave 2 turnaround zone. Price turns around, goes up. You get in the trade here. Next thing you know, by the time you get back up here, you're positive again. So this goes by the wayside. If it continues to reverse, well, at least you ate it at -3 instead of -7. 1 pip. Make the difference what 1 pip does. Thanks, Tim. All right. So, there won't be a scheduled OCR next Thursday. It may be announced as earlier or later, but it won't be 3 p.m. If it's later, it's probably not going to be much later, maybe an hour to 2 hours later. If it's earlier, then it's going to be several hours earlier. So I'll just keep you posted in the groups, but just letting you know. And there's a good chance I won't do it at all. You might have 2 weeks without me. The following week, there for sure won't be one. But next week, there may be one, but it won't be at the normal time. Based on the size of the 1 minute channel, is it good to set a limit on distance from harmonic wave convergent if it's a long first candle, 5 to 7 pips, on determining whether or not to enter? No, I'm not going to get into the absolutes there. There's too many different conditions. Just, one level of filtering is I'm only going to enter closed candle trades, and I'm not going to enter anything beyond 4 pips. See, there's plenty of trades that do. Trouble is, you like to walk away from them because, as you size them up, oh, that only has potential to be 12 or 15 pips. Not worth your time. Forgetting all about 5 pips. Forgetting all about just one more and what that makes with 6. You still have London session 200 pip mindsets deep in the abyss of your brain. You got to get rid of that in the new paradigm. All right, appreciate you guys showing up. We had, at least we didn't fall off any on attendance. We're about the same as we were last week, plus or minus a couple. Actually, I think we're a couple up compared to where we were last week. So that's good. I appreciate that. There was a lot of support internal in the groups for that, people cheering on people to come to the session. And that makes it very important for all of us. So appreciate that. Remember, life can be short. So for those people you care and love, let them know you care and love them. I love you guys for what you do with TAB29, your persistence. You put up with me. And hopefully you'll continue to do so with that as well. And we're going to get to the mother load. So with that, I may see you sometimes next Thursday, but I'll be around Facebook, etc. Y'all take care.